Hi guys, let's start our discussion with the last topic of E2 system securities, system controls and security measures. So the last topic again, if you are referring to Hawk or Gleam or Wiley or any other materials, you won't be finding out this in E2 uh, specifically because this is segregation of duties is something that we already discussed in E1. So why did I repeat this topic again? Because again, IMA laws has specifically mentioned that how segregation of accounting duties are done and how they are useful, and also how the systems help in segregation of accounting duties, how the information systems and information technology use it. So I had to add a separate topic for this. So not really a huge addition to the syllabus as such. It's a very common sense point. So other materials just tell you that okay, the segregation of duties, the four duties are applicable for accounting as well, but I just wanted to give you a small brief about it, so I kept it as a separate topic. So let's go through that real quick. Okay, so first of all, I don't want to repeat the same concept again. You all know what is segregation of duties, so that the same person shall not be responsible for performing multiple duties or multiple tasks. Otherwise they can override the controls easily. If at all the same person is responsible for two or three different responsibilities, then they can easily override and there is a higher chance of committing a fraud. Correct? So the fundamental principle is that when you are designing the accounting systems or accounting softwares, so segregation of duties is the fundamental rule. It serves as a critical control measure to enhance the system security. So this principle involves dividing responsibilities among the different individuals to reduce the risk of error, fraud or unauthorized activities. Common sense? Okay. So now what are the four key duties? We all know what are the four key duties. The first one is record keeping. Okay, ignore the order. So record keeping is there. Who will be recording the journal entries, transactions basically. Separate individuals should be responsible for maintaining the accurate records of the transaction. So basically you are bookkeeper or accountant. Correct? So for record keeping, you need to have a bookkeeper or accountant. So they will be recording the transaction. They should not be doing the transaction. They should not have physical access to the to that particular resources. They should not be authorizing it. They should not be reconciling it. Simple. Record keeping has to be done by one person, and that transaction should be authorized by somebody else. Okay, the transaction must be approved by individuals who are accountable and have authority to make decision. Who is this approval manager? Correct? Okay, next, the custody of assets should be with somebody else. That means the physical or the electronic custody of assets like cash, inventory or sensitive data should be managed by individuals who are not involved in authorization or record keeping. Sir, means basically your cashier or your I can say storekeeper. Now you can give any designation to that person. You can call him inventory manager, you can call him inventory controller, whatever name you are giving. Basically storekeeper who maintains the physical inventory. So this person should not have access to the computers, should not have access to the accounting software. They should not be able to pass the journal entries. They should only have the physical custody of the assets. And so now once a transaction is initiated, okay, understand, a transaction is initiated, it will get authorized and approved by a person, it will be recorded in the system, and then the physical custody, the cashier will make the payment or the inventory will be released. Three different persons should do these three different activities, and apart from these three there should be a reconciliation. Means somebody else, a manager or a internal auditor. So somebody else should come and review this particular transaction, then the entire procedure. So strengthen the segregation of duties by adding an extra layer of control, promoting accuracy and also reliability of the financial system. So the four key duties: record keeping should be done by one person, the authorization of the transaction should be done by another person, custody should be there with another person, and ultimately a reconciliation should be performed by some other person. So these four should not be, any of these four, any two of these four should not be allowed by the same person. Okay, four different individuals should perform these four different activities. Now what is the role of information systems in this entire accounting process? Right, What role does the computers play in this? So first one, record keeping. So now record keeping, instead of manual bookkeeping, record keeping is now automatized using computer systems. So for example, you go to a supermarket, they scan your item, and the product details are automatically entered through the barcode reading system, right? So because of that, what happens? Human error will be reduced, right? So see, the information system automates the record keeping process, ensuring that all transactions are accurately recorded and tracked. This helps maintain transparency and also gives an audit trail that can be reviewed if any mistakes happen or if any discrepancies work. Audit trails means what? Proof, basically documented proof. And first one. Second one is input controls. Sir, we already discussed about input controls, processing controls, and output controls in detail. Already previous topics we discussed, so I'm not going to repeat. So the systems will have some input controls which are designed to do what? To prevent any errors or fraudulent data from being entered into the system. Input controls means while entering the data into the system. These control include validation checks, limit checks, authorization requirement. We already discussed each of these separately. Like a mobile number field should not allow text entered, or amount column should be minimum this much, maximum this much. Those are limit checks or reasonable checks. We already covered this in the previous topics. I don't want to repeat. And then processing controls also same. Audit trails generated by the processing controls enable accounting employees to detect any errors or suspicious activities. These trails are crucial for identifying the hidden functions or unauthorized changes which could indicate theft, embezzlement, or other types of fraud. So for example, give you a simple understanding. So somehow somebody got access directly to the accounting database. They don't have accounting login ID and password, but they somehow got access to database. And now what they did is they are not waiting for anything. So they directly went into the database and added a new journal entry like payment made to Mr. X $10,000, and they took the 10,000 and went. Assuming the person with the physical custody of cash got access to the database. Now he will take that 10,000 and he will record the transaction as paid to marketing or something like that. Done. And he only automatically updated the record as approved also. Approved is equal to true. He already updated that record also. So that entry does not need any special approval also. Approval is also done. So it directly went into the database, right? So those kind of issues can happen. So we need to have proper processing controls to ensure that no unauthorized changes are made. And independent checks and approvals. So this is just a common sense, right? Already we covered this. So every transaction, whether it is movement of funds or whether it is moving inventory, so it should be approved before a transaction happens. The system requires independent checks to verify that all transactions have been properly authorized and recorded, so that the separation of duties, the segregation of duties, authorization, record keeping, and further reconciliation shall be performed. Sir, I already showed you this, but again, just quick recap. So if you see, this is our ERP system, general ledger system module. So this is the accountant login. So with the accountant login, I can't close the period. I can't, look at the budgets and all that stuff. All these options are grayed out. I can't see the ratios of the company. I cannot go to the approval screens. I cannot approve a transaction. I can only record a transaction. I cannot import anything. I cannot print anything because see, profit and loss all grayed out, financial statements grayed out, balance sheet all grayed out. So I can't even, okay, looks like I can access the dashboard. Nice. Okay. Nothing. So it's just that the screen access is there, but the data is not there. So it doesn't matter much. But anyways, you get the idea. So an accountant can only pass the journal entries, no other options. And he also has access to take a backup, take a snapshot of the system. So now what happens, this accountant will record the journal entry, and then the manager, whoever is there, they'll go to the approval screen. Again, two levels of approval, actually three levels of approvals are there. First, a verification of the entry will be there. Then approval of the entry will be there. Two different things. Verify the accounting entry and approve the accounting entry. And special approval of the entries is also there. In case if the transaction is above a particular limit, they have to go for special approval. So multiple, three layers of approvals are required before an entry is passed into the system. Okay. Otherwise, it is just as a record, it is added. Now, why do we need to have, what are the benefits of having segregation of duties, sir? Common sense. I won't even go through these things. It will mitigate the risk of fraud. It will reduce the fraud risk. It enhances accuracy and it will enhance the reliability. It will increase the trustworthiness of the system. It facilitates audits, so auditors can clearly see who recorded the transaction, who approved the transaction, who made the physical payment, and who has the physical custody, and who did the reconciliation. That is clearly available. Audit trail is available. And it promotes accountability. Everybody will now become more responsible, like, okay, if I have to approve this transaction, I have to verify everything, otherwise I should not approve, because it will be caught by the auditors or something like that. Basically, each individual's role is clearly defined so that they cannot push it on somebody else and then, no, it's not my mistake, it is their mistake. No, if you have approved a transaction, that means you should have verified it, so you are now responsible and accountable, right? So that is about segregation of accounting duties and how systems help in that particular process. All right, guys, I think that's it about section E, topic number 2, system controls and security measures. I'll see you soon in the next videos. Until then, keep smiling. Take care. Bye bye.